The wrong entity could be draining your business, and it's probably not your fault. Most owners stick with the LLCs or S-Corp they set up years ago and never look back. But here's the truth, your entity structure can mean the difference between paying $60,000 or $285,000 on the exact same profits. So in this video, I'll show you why that one decision could be the most expensive mistake of your business life and how to fix it. Here's what we'll cover: why entity structure is a silent profit killer, the big reasons owners stay stuck with the wrong one, LLC versus S-Corp versus C-Corp, and what they actually mean for 1 million to 10 million businesses. Real stories of owners saving six figures by switching, and how to know if it's time to make a change in your own business. Most owners know their payroll, their marketing budget, their rent, down to the penny. But ask them how much their entity is costing them, blank stares. Take David. He owns a roofing company, $2 million a year in revenue, still an LLC after 8 years. The piece of paper is bleeding him $20,000 every year, not because he's bad at business, but because no one told him that it had to change as the business grow. At $500,000, the wrong structure might cost you $20,000. At $3 million, costing you $100,000 plus. At $10 million, $200,000 plus. It's like compound interest in reverse. Takeaway: if you haven't reviewed your entity in 3 years, it's probably your biggest money leak. So why do so many small entrepreneurs stay stuck? Habit, inertia. They set up an LLC or S-Corp when making $200,000 to $300,000 and never revisit it. They don't realize how outdated structures bleed money through self-employment taxes, missed QBI deduction, or double taxation. And then the nobody told me problem. Their accountant never bring it up. Their lawyer doesn't specialize in tax strategy, so they keep running with the wrong setup, think everything is fine. Takeaway: your structure isn't set and forget. It has to evolve with your revenue, your goals, and tax law. So let's break it down. LLC, S-Corp, C-Corp. What's the real difference? Tom, the LLC guy, $600K profit, pays self-employment taxes, 15.3%. Total tax bill, $285,000. Sarah, the smart switch, moved to S-Corp, pays herself a salary, distributions tax less, rent her home to the business, even employed her kids. Total bill $125,000. Carlos, the strategic planner, chose the C-Corp, keep profits inside at lower corporate tax rates, maxes retirement plan, positioned for a tax advantage exit. Total bill $60,000. Same profits, same revenue, a $225,000 swing every year, just from one entity choice. Over 10 years, that's more than $2 million. Takeaway: entity structures is not paperwork. It's profit control. Do you remember when I said the wrong entity could quietly drain your business? Tom's $225,000 loss proves it. If you're doing over $1 million and haven't reviewed your entity structure, you're almost certainly overpaying. Wrong structure means higher taxes, slower growth. Right structure means more profits, more scalability, and more wealth. If this opened your eyes, hit like and subscribe. Want more? Watch my next video on the 5 biggest tax myths costing CEOs 6 figures. And if you're ready to stop overpaying, Havenstone can help. We analyze your entity structure, run the numbers, model the savings. The consultation is free, but staying in the wrong entity could be costing you 6 figures every year. Schedule a call today. The wrong entity is like having an employee that's stealing from you every year. The right entity puts that money back in your pockets, fueling growth, freedom, and long-term wealth.